All right, welcome back to The Big Skinny with me, Lou Basenese. I'm not going to lollygag around here because we don't have time to spare. I'm going to get right to it because the man of the hour, the man everyone wants to talk to recently is Eric Jackson, and for good reason. So let's welcome Eric Jackson back to The Big Skinny. Glad to have you again, my friend.
Great to see you, Lou.
Yeah, man, I don't know. I think you are the busiest man alive in terms of social engagements and podcast and media. So do you ever get a chance to catch your breath?
This weekend, I'm taking my girls to like an amusement park tomorrow with two of their friends. So yeah, that'll be fun. That'll be fun.
Good for you. Look,
but it's been pretty busy.
Yeah, I want to give credit where credit's due, and we don't get any of this, but since you were on our show the first time, you mentioned IREN, Cypher, and Open, and they were, well, the last time we talked about this, Cypher was up 77%. This was as of September 5th. IREN was up 87%, and Opendoor was up just over 1,000%. Fast forward a mere 10 days or so, and we're now looking at Cypher up almost 200%, same IREN's 150, and Opendoor 1,729%. You got the hot hand, my friend. What is really driving these? So people will tell you this is meme stock mania. I want to hear it from you, who's done the work and the research, and we had Mike Alfred from IREN Board of Directors on last week talking about the moves there. But what do you see that's driving these stocks in particular? And then we'll get to some Opendoor.
Sure. Well, I mean, Mike is great, and he's one of the reasons why I got into IREN and Cypher. I was listening to one of his spaces, I think it was back in May, and so he's sort of he got me excited that the rest of the world would eventually see that there's not enough energy to power our desires to type into ChatGPT and use other AI applications. And so as the world kind of woke up to that fact, there would be a realization that players like IREN and Cypher, who've got the gigawatts actually coming online in the next 12 to 18 months, would be in demand. And then they could sit back and be in the catbird seat to sign lucrative deals. And I think people have started waking up over these last 3 months to that reality. And then the Nebius deal just a couple of weeks ago now, that where they signed a deal with Microsoft that they would provide 1 gigawatt of AI data centers from New Jersey to them. That was worth $18 billion over the life of the contract for Microsoft.
Which is crazy. Yeah. I mean, if we applied that same multiple, right, or that rate per gigawatt, I mean, what does that do to your calculations for the value of an IREN or a Cypher? I mean,
it's like each of them have 3 gigawatts coming online in the next year, and they haven't yet to do that. And every month that goes by, the price seems to go up. So, I mean, I got into them both. IREN, I think, around in the 9s, and Cypher in the 3s, thinking that eventually they could each 100x. And yeah, I don't think it's going to happen, next year. But I think 3 years out, 4 years out, I mean, that's, you're talking about 900 for IREN, 300 for Cypher.
It's not hype. Like you said, they have about 3 gigawatts of power coming online in the next, call it 18 months each, not just one of them. You apply that same math where, let's make it easy round numbers, 20 billion for each gigawatt. I mean, that's 60 billion worth of market cap that should be ascribed to them on a simple 1x multiple. And things are crazy. I mean, IREN's at what, 10 billion market cap today as we look at it. So, it could have 6 times that in annual revenue secured for these gigawatts. So I think that's what separates this out from the meme stocks, right? Like if I look across, it's Jim Cramer.
It got up so much. I mean, like after Liberation Day, I mean, I think IREN got us under $6.
Yeah.
And how today that's knocking on the door for 40. And I think, one thing I see all the time with Open is that shareholders say, "Oh, I missed it. Oh, I missed the move from 6 to 40." Yeah. And yeah, sure, you missed it. Okay, that's fine. But you got to think about like this other math that you and I were just talking about. This 20 billion, deals times 3. That's a $60 billion deal that IREN could potentially announce. In the next little while. Like, what's that going to do to this $10 billion stock? I mean, it's going to be multiples more. And so, yeah, you should never feel just because you missed the first 10 or 20 or 50 or 100% of the move. I mean, you have to think of the bigger picture and where things are going. And both of these companies just have a phenomenal future in front of them.
Yeah, and I think, look, this is where I want to get your thoughts on this, because I think traditional financial media has a blind spot here, right? They're always looking at mega caps and large caps. So when they see moves like this, they just don't believe there's another 100x or 1000x left in the tank. So that like Jim Cramer's coming out calling this a meme stock, Mark Cuban. I mean, you go down the list, there's everyone saying that. But you and I look for alpha in the small and micro caps where they can make 1000% moves before they even get on the radar into the small cap, mid cap land. So, I mean, how do you educate some of your investors to the volatility that comes in this world, but then the opportunity? Like, what would be your encouragement? Is just like, how do you encourage people to be unafraid to buy when they've seen a big move?
Well, I mean, I'm like you, Lou. Like, I have been waiting for this small cap rally for probably, it feels like 2 years now. Okay.
Yes.
So, and I've been wrong, and when you're waiting and you're wrong, you're wrong. And so, like,
someone said to me, early has the same number of letters as wrong. And that's what I always use because it's true.
Yeah. So, I understand why the Jim Cramers of the world have, it's safer to kind of sit back and just trust the Mag 7. I mean, these companies are like a bulletproof almost.
Yep.
And so, but you got to realize that when these smaller cap names move, they really move. And I think we have enough evidence now this year, like in, say, the last 6 months, that I think this move in the Russell is real. And usually, what you see when you go look back in history is that when you see a bigger move, like I think we've seen in the small caps, it doesn't just sort of go for 6 months and then immediately, cuts out. I mean, it's typically like, talking about a year to some, maybe 3 years that these names could run. And if they run, they really run,
Yes.
And you're not just like 10% a year, 30% a year. I'm talking like multiples, that they can grow, especially starting off of a small base.
Yeah.
So,
and it usually happens after like market dislocations, right? Because if I look back, Liberation Day started this one, right? Huge bounce off the bottom. Before that, it was the COVID lows, small caps and micro caps surged way ahead of large caps. And then you go back to the financial crisis, even the dot-com era. Like, it seems like these huge market and sudden dislocations always spark these multi-year rallies in small caps.
And I think like people, this is since the great financial crisis. Like so many people, especially on X or Twitter, they want to be the ones to be seen as smart in their little peer group or FinTwit group and call the end of the rally, right?
Right.
And so they like everyone's like, it's not real and it's about to fall off a cliff and this is just another meme stock. It sort of goes with that thinking. I'll never forget. I went to China once. I think it was in 2010. So early 2010. So the market bottomed after the financial crisis, March 2009. We weren't even a year removed from the market bottom. And I gave like some talk over in Beijing to this group of folks that were at like the Wall Street Journal bureau in Beijing. And they were convinced that the market was about to go to turn, fall out of bed again. Like, and they couldn't believe like this thing could like rally for, another year or 2 or 3, let alone, I think it rallied basically until COVID, sort of 10 years.
Yeah, no, it was very long. Yeah. So and then that's a reminder, we've shown on this show before, kind of the average duration of a bear market versus the average duration of a bull market it's not even a comparison. I mean, bear markets are like you blink and they're over, and bull markets last for years, sometimes, 7 to 10. So let's talk about that from the perspective. Let's get into Opendoor a little bit. You've talked at it ad nauseum. I'm sure you're like tired of it. So let's go at it from a different angle. If we had to put together a short thesis, what would it be? I like to do this on the other side when I have high conviction. One of the knocks that I've heard from someone else that's like, I just don't love it, is that people don't want to sell or buy a house sight unseen, right? Like, is that really a market? Is an app really going to change? And I remember this coming up when virtual reality was first coming out, that it would disrupt the real estate market. How would you respond to that thing about just because you can put real estate on an app doesn't mean it's going to change the market? What would be your counter argument to that?
I think I would just say that, like the one truth is that we seem to be more and more antisocial as time goes on and want to live like looking at our phones like this. And so just like there might have been people that didn't think you would want to stop calling the local cab company to order your cab and just do it on your phone, or buy a car through Carvana, as opposed to going to see Charlie, at your used car dealership and haggling over the price of your that you're going to pay for a new car. Like we've seen that like more and more like we want to go in this direction of one click, impersonal, do it through the app and all that. So I think even though it might, shock a Gen Xer like me that somebody doesn't want to touch and look and feel, you got to remember, like, I'm kind of like approaching like grandpahood here.
I know,
and that's
man.
Like an older
you and I
way
both.
of thinking. Yeah. So, I mean, if I was going to build a short case against Open, I probably would point to, the risks of higher for longer, the macro going against the housing market, inflation being stickier than expected, like has been in the UK. And therefore, that's going to be a drag on Open because, they, along with others in the housing space, like, as the rates come down, it's like a magic elixir, and the volumes will increase, the refis will increase, the housing activity will increase, and that's going to be good for an Open. But what if that doesn't happen, and how can they manage through that? I don't know. But now the short thesis saying, oh, they have bad management, that's gone. They have great management.
Gone.
No, like you could maybe say that, I don't know, like the morale is going to be hurt because Keith Rabois has talked about laying off like 80-90% of the company. And so what are they?
But here's the thing. Look at the Mag 7, right? 2 years ago, they went through some pretty hefty layoffs, and it unlocked that profit growth for them and the revenue growth. So you make a good point, though. Like the short thesis really is hinged on macro points that might not go in the company's favor. But when we look at the micro from the bottom up fundamentals, I mean, Anthony Pompliano called this the greatest activism campaign, I think, ever in the stock market's history that you catalyzed and really are the leader of it. You've changed the CEO, you've changed, new CEO, new board. What do you think is next, right? I mean, that all happened in 10 weeks. What are the fundamental things that you see changing that Opendoor can do that really unlocks even more value to get to your price target at 82 and beyond quicker?
Well, I guess one of the big bear theses against Opendoor has been iBuying has never worked, and it never will work, and that's why Zillow and Redfin got out of it. And Keith Rabois and Eric Wu, they're not that smart because they were involved in this company for 10 years in version 1, and they failed at it, and therefore they will fail again. So it's basically sort of saying that if I had to summarize, it's sort of a lazy person analysis that would say Apple will never work because Steve Jobs tried it once and he failed, and then they brought in the hotshot John Scully and he failed. So they should just, like, at that point, they should have just put it in boxes and gone home and called it quits. That's the short thesis, or that was the short thesis. So iBuying, like, itself doesn't make a lot of money. It's not as profitable as Carvana is selling cars. It's a bigger price point, and therefore the gross profits are smaller. But I've sat with Keith, and I spent an hour with him in Soho a couple of weeks ago, and met him for the first time. And he spelled out in some of his. I think he had a tweet in mid-August where he sort of gave his new strategy, which was layoffs. It was like focus on AI. It was like exploding the sellers and buyers that are on the platform. And it's truly like the original vision for Opendoor was the Amazon of housing, which sort of means this like disrupt the agents. Opendoor had been like trying to play footsie with the agents and say, hey, we can be friendly with the agents. We can split fees with the agents.
Right.
That's going to go away with Keith Rabois. I can assure you. He wants to blow the agents out of the water. He wants to have this like pure, like, one click selling your house, and maybe at one click at the same time as you're selling your house. Oh, and would you like to be offered a line of credit to go buy your house?
Go buy another house. Yeah. Right with us. Yeah.
Buy it. So that he wants to like totally transform it. And I think he's energized by it. I don't think he was expecting this like open army thing to kind of pop out of nowhere. But like, I don't know all of his private companies that he has in his portfolio, but I really think like this is the most exciting opportunity that he has on his plate right now. And I think feels like a sense of redemption because he wrote the business plan for it. And I think he feels, and Eric feels, a sense of, hey, we've been given a second chance at life here, and we're not going to screw this up. We're going to actually fulfill the original mission for this company. And we have a great CEO now in Kaz to do it.
I think that's a great assessment too. It's like Steve Jobs coming back, right, to their baby. They're going to figure it out, get it resurrected and moving in, multiples higher. One of the things that I think is super interesting in the wake of trying to find a new CEO, they started communicating, which you advocated for early, communicating with retail investors, self-directed investors, to now where they have an entire website. I mean, I think they tweeted it out where it's the community website. You can follow the QR code on the screen to check it out. I think this is going to change the way most public companies now communicate with investors. What are your thoughts about it? Do you see this as kind of a precedent setter where the IRENs of the world, Cyphers, and other companies are going to follow suit and start having more transparent communications, especially in light of the president calling for semi-annual reporting now instead of quarterly reporting?
I think you're right. I think it's not the reason why they didn't do it before was the prior management was like it was kind of like a generational thing. They had no idea how to do that. They didn't think that was part of their job that they had to cultivate. I think President Trump getting elected was kind of a watershed moment, not just for business, but like in the sense that here's a guy who could go on a 2-hour podcast and just hold his own and just come across as a real person, authentic. That's the word I always hear. Authenticity, right? And Kamala was seen as this stage-crafted, nervous person, inhuman, inauthentic, incapable of speaking, not a real person. Nobody agreed 100% with everything Trump said, but they just sort of felt like, this guy's a real guy. And he's telling you what he's going to do. I mean, he's being honest and authentic about it, right? I think, and now I think people expect the same from their podcasters, from their CEOs, from their whatever, hedge fund guys, guys like me. They gravitate to that. And so, I mean, I hear that all the time. Like, I get lots of criticism. What an idiot, I can't believe, you have no self shame, standing in front of Drake's house. I can't believe CNBC ever let you on the air.
Yeah, but look, dude, but here's the thing. Anyone that's done something great in the world always ignored that nonsense. You have to do something different. And I think what I love about you is that you're taking the trolls in stride and just saying, hey, this is what I did. I mean, your son came up with that idea to stand outside Drake's house, wasn't it? So as a dad, you're going, hey, my son's smarter than all you other idiots out there that haven't had an original thought in a decade. Like, I'm leaning in on my son, right? So how do you...
Yeah, I mean, I'm old, I've been around, I made mistakes. And like, I don't know, like the way it started was like some guy who I'd never heard of contacted me on TikTok. And he said, I want to do a TikTok live interview with you. And I didn't know who this guy was. I'd never heard of him. And I sort of had to pass it off to my son. And I said, Julian, should I waste my time with this guy? Or is it going to make me look bad if I do a TikTok interview? And he like in a couple of seconds, he like pulled up the guy's profile. And he said, no, this guy's legit, Dad. You should definitely do this. You should definitely. Okay.
So, dude, I love your willingness to adopt and adapt in a new society, right? Like things totally have changed digitally where, you and I grew up in this traditional Wall Street world where it was just siloed off, no exposure. So I give you kudos for that. I also want to, we have the chart. I think we can bring it up of your performance too. Here's one other thing. Look, I think there's a lot of people that are riding your coattails because you're a super generous guy and you share your research. I'm sure you're always getting asked, like, what's your next stock pick that's going to go up, your 1,000% winner? I'm not going to ask you that. Instead, I'm going to tell you, like, look at this impressive performance that you're stringing together. You're honest. You've had mistakes. We all have in this world. But I want to encourage people that are accredited investors looking to invest in your hedge fund to reach out to you, because the best way to get your next stock pick is to be one of your clients. You're going to get it before you put it out anywhere else, right? Am I wrong? Or are you going to tell the world before you position it for your clients?
No, I mean, of course. I mean, I work for my investors. That's
exactly
how I make money. That's how I support my family. And so, yeah, I appreciate that. And I've been really like, I've been so fortunate. Like so many great people have reached out just in the last few weeks and said, hey, I want to invest. And I've got, there's money kind of that has come in, that will come in, and I'm really grateful for that. I mean, but I do think it's important to kind of share, like, I do have a new idea. I'll share this with you, Lou, and I'm going to announce it next week. I might announce it as early as Monday. And I've been working on this thing for months. I'm really excited about it. I think it's a great opportunity. But I've been on a hot streak, but I've also been on a cold streak too. And I know that you're only as good as your last idea. And I know if I lay an egg, with this idea on Monday, then people will stop paying attention to me. And they'll say, this guy just got lucky with Opendoor, forget it, and I'm out of here. I'm not going to pay any attention to Eric. So, I mean, I have to keep coming up with good ideas. I think I have a good idea. I think I had a lot of people around me saying, not my son, but I had people saying, you need to monetize this. Now you have all these people that invest in your fund. You have a lot of retail support, and you should start a paid newsletter, and you monetize that. That's the way you do it, Eric. And you could make I don't know, millions or something, and it all depends on how many people sign up for it. And I went to my boys. I have my two boys, my 16-year-old, and then I have a 20-year-old. And I said, "What do you think about this, guys?" And then they said, "Dad, no, they'll roast you on Twitter, Dad, if you do that. They'll roast you. You can't do that." I mean, so I would rather sort of just share it on Twitter. People will make money from it. I mean, if they agree, and maybe they won't, and then maybe they won't buy it. But if they buy it and it does go up the way that Open did, they'll do well. I won't participate in that. But I feel like there'll be enough people that are going to pay it forward. Help me out in other ways, or invest with me in other ways that, that's what I care about. And it's been so rewarding, Lou, like just get all the DMs I get, like every day, DMs from people who've made so much, money from Opendoor to this point. And I think there's still, big upside to go. And they say, you can't believe you've changed my life, and we've paid off credit card debt or student debt or this and that, thank you so much. And
dude, that's priceless, right? Like if all that money was in your fund and you made an extra $10 million, it doesn't have that same reward, because it's changed your life, but it hasn't, or to some degree, but it hasn't changed all those people's lives. So I think, look, I'm going to encourage you. I came out of the newsletter world where I charge for subscriptions. I worked in it for 15 years. Yes, it can be wildly successful and profitable, and you can change people's lives. But like you said, you're only as good as your last pick. When you pick some stinkers like I have in the past, and you got 100,000 followers, you know what it leads to. It's a lot of headaches. So I think I would encourage you, keep with your abundance philosophy of just sharing it. That's what we're trying to do here. And let's change as many people's lives as we can by coming up with some really good ideas instead of siloing it off and keeping it to ourselves.
Okay.
Yeah.
I totally agree.
Well, listen, and we always appreciate your willingness to come on and share your latest thoughts. I can't wait to see what your next new idea is. And everyone listening, I want to encourage, if you're not following Eric, you're missing out. You are more prolific than anyone, but you also give great insights. Make sure you're following him right now, Eric Jackson on X, so you can get his next possibly 100,000 bagger. I want to thank you for getting me involved in Open, my friend, around 2, and IREN around 19. I'm benefiting because of you and your willingness to share. So please keep doing what you're doing, man. We appreciate you.
Thanks, Lou.